GME today, we're still getting covering. We are liquid. We are very liquid, but we have not started to see any actual shorting yet, which is worrisome given the decline in price. If we go down to the shorter time scales, we might be starting to see. Yeah, see, this is kind of turning around. So we haven't gotten a lot of shorting yet, but we are getting some. And if they do come in, they will have plenty of liquidity with which to short. It is currently just as ample as it was on the other high back in May. Maybe even a little bit more liquid. Yeah, I mean, it is a little bit more liquid because the share offering. What we do have is a ton of liquidity in XRT. So I would say that XRT is settled out, but like maybe IJR isn't yet, which would be interesting. Also, I guess there's a question of if GME is moving to the Russell 2000, which I do believe we get an update on today. There is still some ARB with the foreign exchanges that's unresolved. A signal that it's been kind of it's dropped a little too much. Somebody's going to want to resolve that arbitrage. The resolution of that arbitrage could drive positive price action. Could also drive negative price action. So we'll see how that plays out. Yeah, I'll look into the Rule 4210 over the weekend and see if I can kind of track down where that next like Juneteenth settlement would fall and see if DFE bought the right calls. I wonder if he knows that the settlement for that changed with the T+1 update. I'm sure he does, but I wonder if he does. Anyway, SPX kind of just closing pretty flat again. A little red on the day, far above the open for the week, right? So we do have a higher high on the weekly. The little bit of weakness we're seeing here into the back half of the week, it doesn't give me a lot of confidence that next week's going to be super bearish, but we might move down to with the short vol at 5350, 25 and 5300 closing today. That might open up some range like Monday. Yeah, Monday to fall back into like the 5300, 5325 range where the short calls would very much like to push price. So I do think there's a potential for kind of a weak Monday, especially with yields rising so hard today and Dixie turning up. But I think if we do fall, we're very likely to stabilize in that range or to the high end of that range, like 52.25, 52.30, or 53.25, 53.30 into CPI and FOMC. Getting a little bit of topping out here on ES. Seems that 53.68 is a very solid resistance, and there is some open range below us down to like 53.33 or even back to 5300. And as we approach expiration, that's going to kind of match up with SPX with the futures expiration being in the next 2 weeks. Broad commodities today down 1.63%. A little bit of a loss in oil, big losses in metals. We see a big decline in gold, silver, copper. We're seeing declines in wheat. So just commodities across the board getting hammered. We got another gap down here. Currency risk might pick up again next week, or we might see commodities surge again as we approach the Fed decision, but I think also especially the BOJ decision, which is a little bit further out. Dollar up, yields up quite a lot today. A big shift in like the bull flattening we were getting is now moving back into bull steepener, right? God, I hate those words. Basically, we're getting more inverted again, right? The curve is inverting more. Correlation on the 3-month turned around today. So we're seeing a little bit of the short vol de-risk on the 3-month and a little bit of dispersion breakdown 90 days out. However, the 30-day out window, it actually picked up. So we're seeing some shift from longer dated dispersion from 90 days down to 30 days, right? Which could be another indication that short vol is seeking an exit, right? Especially if we start to see, and this is something we saw in the last drop a little bit too, but if we start to see correlation on the 3-month really break down, and but correlation on the 1 month is still staying fairly elevated, that could be a sign that they're rolling their contracts forward, right? Instead of rolling out, rolling closer to expiration, which could be, an attempt at exiting those positions. USD JPY skyrocketed today, alongside the dollar. The synthetic swap that we mimic here picked up quite a bit of leverage, about 20%, 24%. And we see, that correlating strongly with the inversion in the yield curve, steepening there. And however, short vol stayed strong throughout the day, and we don't see the forward convexity yield of volatility moving up, right? In fact, it moved down, which is not how those are generally correlated. Usually they're positively correlated. So that's something interesting to note. It means that short vol is kind of trying to fight back against the bond market. They probably can't do that for very long, but they might be able to do it till next Wednesday. Bond volatility has been picking up. This should reverse that a little bit, right? But it is still definitely elevated from where it was just at the beginning of this week. And the big drop in bond value or yield, the big increase in yields today, should kind of slow the momentum down there a little. So I would expect, this is yesterday's print on Move, I would expect it came down today. Skew's been dropping, right? And as Skew drops, that means more and more participants are picking up those tail risk hedges, and there's more uncertainty in the market, right? At the very top of Skew, there's a lot of certainty that nothing will go wrong, which leaves the market exposed to very large potential downside moves because everyone's kind of overcrowded into short vol. And this kind of indicates that people are getting out of that short volatility and maybe into the call side of volatility, right? Like they're selling calls versus selling puts. And depending on the moneyness of those, that can affect the Skew index in different ways. 39.76% of the S&P over its 20-day moving average. That might tune down a little bit when it prints at 415. And to wrap up the week, yet another day of slightly more positive correlation between cash VIX and VIX futures. Now, I did say this before, part of this is us moving into the expiration, where the spread between VIX futures and cash VIX kind of coalesces, and they come together. But some of this could also be that there is more demand for long volatility, and that's bringing both the contract in front and cash VIX more in line with each other. The last thing, we almost priced out all of that extra half a rate cut today, despite having no effect on equity indexes, or not much of one. Half a rate cut is just almost completely wiped out, and we could see the whole thing wiped out depending on the summary of economic projections next week, and we could see rate cut expectations move back to zero, or maybe even below zero, right? Which is something we haven't seen really since October, November of 2022. But it is possible. More and more stagflationary data that we get that indicates a move to stagflation, the less and less likely it will become that the Fed will be able to cut rates at all. That's part of the problem with stagflation, is that the general monetary tools used to defeat inflation, or the monetary tools used to stimulate the economy, both become ineffective simultaneously, making the Fed the cuck that they have actually been for the last 3 years, but more forced into that position, right? Because in stagflation, if you cut rates, you raise inflation and you don't stimulate the economy, right? And if you raise rates, you kill the economy while trying to attack inflation. And so there's really no way out of it. You need natural growth in the system to push the economy out of a situation like that, or austerity. And the US will never do that. We'd fail as a country first. So yeah, we're going to need some actual growth that's not stimulated by the government. And stagflation in and of itself as it becomes more and more official, absolutely increases our risk for a debt downgrade. And if we do get a debt downgrade, all of that tightening will be done by the bond market, regardless of the Fed's opinion on monetary policy. Sup, Girth? Been around since your second stream. I just wanted to say this week has been a lot of fun. Lots of nostalgia today. You've done so much for all of us, and I want to say how much I have appreciated it. Cheers, dude. Thanks, Tim. I appreciate that, man. And, you know, I'm glad you're able to watch the stream again, or at least the Sunday stream, without it biasing your SPX positions. But I appreciate it, man. Thanks. No debt downgrade. What? Why? Oh, because you're still inking your deal? The bond market's not going to wait for you, Popcorn. Even if it means Colonel won't have a stay-at-home dad. I've done the best I could. What happens to the stag if I cover my eyes? Disappears. Ask JPal. He's good at that. All right, thank you guys so much. I'll have the weekend stream Sunday, 12:30 p.m. And I will see all of you, the rest of you, on Monday. Pickles Picks will be out Sunday night as usual. Everything should be the same. I hope everybody has a great weekend. I hope you guys made a bunch of money off GME or just stayed away from it. And I will see you guys later. Bye.